I spoke to someone this morning who's bullish and excited, and the Fed's going to cut, and the housing market's going to rebound, and we're going to have great things going on. And there's so much positive expectations built up that it just takes a little bit to nudge it over the cliff. And I'm looking at a lot of stocks that are just at the tipping point. There a lot of them are on at or close to all-time highs. The flyers, you know,
Yeah.
Palantir, a couple of the others. I just looked at VGT, and that's on a long support line that goes back to the lows of April. I think it was April at 410. Where was it? It's yeah, the April low at 450, and we're at 700 now. So we've come a long way in VGT, Vanguard Technology Index.
Yeah, that one's a flyer.
It does,
It's at 700 right now, right?
yeah. And if that breaks support, I don't know. Can we go down 50 points, 70 points,
I
100 points?
can't, I can't really
Can't
negotiate
close the
this
garage.
the way I
Yeah.
should, but I'm trying to look at cent. But anyway, it's really worth asking Grok what it is. Can you read it? Can you see it on your email?
Let me see. Has to update first.
I asked the question. I said, is the market over leveraged?
Yes, leverage in the stock market has increased over the last 6 months. As of August 15th, 2025, margin debt, a key indicator of leverage, has risen significantly, passing $1 trillion for the first time, with a 25% increase over the past year, much of which occurred in the last 6 months. Posts on X highlighted this trend, noting that retail leverage, including margin debt and speculative options trading, is at or above peak levels seen during the dot-com bubble and the 21 meme stock era. Additionally, global leveraged equity funds saw record inflows, $14 billion in April of 25, nearly triple the previous high from 2020, though a subsequent $45 billion drop in leveraged ETF assets year to date reflects volatility. Despite this, the overall financial system's leverage remains elevated, driven by both retail and institutional borrowing, even as some funds reduced leverage during market pullbacks in April.
So we got a leveraged market at all-time highs with optimistic earnings indications. Now, I could have said this 6 months ago. We
Right.
may have. But it seems to me that people are talking about a slowdown here. The labor market seems to be slowing down, at least according to whatever figures we could rely upon. So it's not going to take much to push this thing lower. And we could drop 5%, I think, comfortably. And that represents a decent drawdown.
Yeah, to me, there's so much good news priced in. Putin at the end of the Ukraine war. That's going to be a positive. Fed's going to cut. That's going to be a positive. We're going to get more capital inflows. That's going to be a positive. We have so much tariff earnings. That's a positive. There's so much built in that it just takes a little to push it over the
Let me
edge.
ask you this. Suppose the Fed cuts 25. I think the market will be disappointed. I think they're expecting 50.
I think it'll be status quo, but I think that the bulls who are thinking you're going to get a big market rally will be disappointed. Not because the Fed didn't cut 50, but because the market hasn't rallied, 300 points on it.
Well, here's what I learned trading, that if you get good news and your market doesn't rally on good news, that means the longs are already there. There's nobody left to buy it. If you get so if we get good news and we don't rally on good news, we're going down.